This single TradingView indicator has been one of the biggest reasons why I've been able to consistently pull profits from the market. And in this video, I'm going to be revealing what this indicator is and exactly how you can use it to make consistently profitable trades, potentially profit $5,000, $10,000, even upwards of $20,000 a month. So let's jump into the charts. So one of the biggest things that really helped me when I am viewing a chart and I'm preparing to do my analysis is a way to organize all of the price action. And the one indicator that I have found that really allows me to do that is called sessions. So if you come up to the indicators and you type in sessions, they will all be pretty much the exact same thing. But the one that I use is the first one that appears by Junior FX Addict. Now what you want to do is simply click on that and it's going to open up on your charts. Now yours might look slightly different than mine. That's just because of the color settings that I have. But if you want yours to look exactly like mine, here are the settings. I have Asia session unchecked. I have London as a green background and I have New York also checked with a red background. Now, if you have these settings, it will look exactly like what you're seeing on my chart. Now, the reason why these columns are important is because they show you the different sessions, the open and close times, as well as the overlap. So it's just a way for me to organize all of the price action. Now, as a bonus, here's also another indicator that can take this a step further, and it's called weekend, Saturday, Sunday. So if you come up to indicators again and you type in weekend, you'll see this one right here. Weekend, Saturday, Sunday. Click that, and what that will show on your charts are these yellow vertical lines. So with just those two indicators right there, these are completely time-based, meaning they have nothing to do with price action itself. Like most indicators that people are familiar with, like the RSI or moving averages or Bollinger Bands, a lot of that has to do with price itself. These all have to do with time. So just looking at this section of price here, now that I have those indicators on showing the weeks, I know this was all 1 week's worth of price action. So let's just say this is the current week's price action here. I know everything starting from here over is the current price action, and everything over from this line to here, this is last week's price action, and so forth. Everything in this was the previous week, and everything here was the week before that. So it's just a way to organize and train your eye to look at the right price action at the right time. So very similar to how it chunks out the weeks, these vertical lines in the back also chunk out the days, but more specifically, the times of session. So the white background here represents Asian session. The green, that shows us London. So London for me starts at 3 a.m. Eastern. And now we can see a maroon color right here, and that is indicating right here the start of New York open, and that is at 8 a.m. And then once London session closes right here at 12 p.m., now it just goes into a red background until 5 p.m. Eastern when New York closes, and then that's when we enter Asian session again. Now, the reason why this is important and why it made a huge difference in my trading is it basically gave me a really good idea when price was going to produce its move. So if we look at Asian session, typically this is more slower price action. There's more consolidation like we can see here. So if we look at price action once New York closed here, it just moves sideways. If we look at Asian session here, price just moves sideways. Here is another form of consolidation after we saw price push up in all of New York, and then we can see when it came into Asian, it was just a pullback. Then we can see this Asian session here here, it started here, and it just moved sideways. And you will see this for most of Asian session. Over here, more of the same, just move sideways. Asian session moves sideways here and over here. When we come into London session, we know there is more trading volume in London, and that is when things start to pick up. The most volume present at any given time in the forex market will be at New York, London overlap. So as a day trader who trades primarily mid to lower time frame, this is very significant, especially because there are very specific patterns that happen when price transitions from one session to another. And that's what we're going to talk about today. And that's what really shifted my results as a forex trader. So what we're going to do is we're going to break down all of these Asian sessions and what took place afterwards. And then we're not going to really get into targets or top-down analysis. We're just talking about time and price. Let's start over here. So when we looked at this first Asian session here, we can see price did nothing but just move sideways. And when price is moving sideways, you got to understand it's consolidating and it's building a lot of orders, right? Because there's a lot of opinions that are formulating with price just moving sideways. Because think about it, when price is just bouncing these levels and kind of going back and forth, there's a lot of opinions that are formulating here. There's a lot of people that, perhaps are buying off of this support or selling off of this resistance, depending on what their specific strategy tells them to do. And then you're going to have a lot of people anticipating breakouts. So they'll look for a sell stop, looking for a breakout like this, or they'll wait for the breakout to happen and look for a break retest. Same thing to the upside. If price were to push up or they were bullish on it, they might have a buy stop looking to catch that breakout, or they'll wait for the breakout and then look for a break retest like this. So that's pretty significant here. So what we are looking for is something like this. Here's a really good representation of it. I will do the same annotation so we can see again, price moving sideways, consolidating, ranging between a support and resistance area. So here it looks like price was breaking out to the downside. So any sell stops triggered in, or people who were waiting for a level to break, maybe they were getting induced as sellers. And then we can see it just flips to the other side. So the bottom was taken first after we were clearly bullish, and then it continues bullish. So if we look down here, it was the same thing. And again, focus on when this happened. So if we see price moving sideways in Asian, that is when we're looking for Asian high or low to be taken. And then we would look for price to go the opposite direction, and then that can offer entry and a directional bias for the rest of the day. So if we look at this price action here, we can also pay attention to previous day high, which was right up here. So price made a strong push up here, it pulled back, Asian just moved sideways, and then as soon as we come into London session, we have more volume present. It attacks the consolidation that happened in Asian session. So we can see price pushes down below and then immediately pushes up, breaking structure, showing a bullish impulsive move. And then when we come into New York London overlap, that is when all the volume is present. This is when the most volatility is present in the market. That is when we can see price just roar to the upside, attacking previous day high. When we come into the next day, we can see the high up here, and then we can see Asian high made equal highs right here, and then we have this low here just moving sideways. We came into London here and it really didn't do too much, and that's perfectly fine. If it doesn't happen in London, we would look for it to make the same exact pattern coming into New York London overlap. With New York London overlap now present, we can see price spiked below the London low, the Asian low, and these equal lows right here before it did a 180 blasting up to the upside, painting another bullish expansion. And then we can see all of the rest of New York session here, price was just bullish. More or less, it's giving you a real good idea of what you can expect and when you can expect it. So Asian session, I don't ever get involved. I am typically waiting for the New York London overlap. So if this was price action on the day, and I see this and it's like, okay, Asian, great, move sideways. We have some nice ranging price action here. I'm not up in early London. I am catching the end of London before we come into New York. At this stage too, it's like, okay, well, London didn't do anything yet either. I'm going to expect it to happen in the overlap, and I would look for price to do something like this if I believe price was going to continue to the upside. When that does happen, that is when I go in and I work out my entries and all of that good stuff. But if I wake up and London has the manipulation candle present and it's doing something like this, that's great. That's usually when we come into the overlap and it's offering entry. And then I would look for a retracement and then the continuation. So I'm basically just looking for this pattern to be created, whether it's in New York overlap or just London. That's going to give me a very good directional bias for the day, and then we can stack in all the targets like other equal highs or lows or previous day high or lows or previous week highs and lows, whatever it might be. Let's keep it going with a few other examples here. And just about every single move you're going to see in the market, you're going to see some type of price action similar to this. So even if we go back further over here, you can see Asian session move sideways. London really didn't do anything, so that's when we would expect it to create the pattern in the overlap. So we can see price pushed up here and it spiked these highs and then made its move and made a lower low. Price came back up and respected this manipulation candle before it pushed down, targeting previous day low and this old low right here. Over here we can see price didn't really do a whole lot here, and then London broke down, New York broke down. It didn't give the pattern, and it won't every time, but just about every single move you will see some type of pattern along the lines of this. And I would encourage you to go back test that and look at it on your own. Go find strong impulsive moves like this or even like this over here, and go look at what took place before it and when it actually happened. So if we just zoom out, almost every single strong impulsive move, and I believe as traders, that's what we're trying to get involved in. We're not trying to get entry in here and just be inside a price action going up and down, up and down, up and down. I think as traders, we're trying to catch the continuation moves that are actually running highs or lows or making higher highs or lower lows. So most traders are looking to catch these strong moves. Look at when all of these strong moves happened. Here, New York, London overlap. Here, the only movement in that day was really New York, London overlap. Same thing here. It started in New York overlap and ran for the rest of New York. Over here, same thing. It ran in the overlap. Here, not much. London started breaking down. New York, London overlap, slammed to the downside. We didn't have much happening here, but the pattern was still present. Let's remove this. We can see Asian not really doing a whole lot, and it pushed up here. Kind of was making a little bit of a trend line and made some equal lows right here, break retest level, and we can see price spiked down before going up. Then price came back down and tested this area here and then respected it before continuing up. So we come over here, we can see price not a whole lot here, but we did get a strong move in New York London overlap, just like here and over here. So it really tells you, okay, if you're looking to catch a strong continuation move, here's exactly when it's going to happen. Rarely are you seeing these happen with Asia session. Again, that will obviously have some correlation to the pair that you're trading. If it's a pair like a yen, you will see them run in Asian session because it's correlated to that session. If we go over here and look at the last two examples here, this week's price action here, we can see Asian didn't really do much. It just established an Asian high here, relative equal highs. It didn't make any real strong type of move. It just kind of went sideways here. Then we came into London. It didn't do much. So at that point, that's where we're like, okay, I'm going to wait for a strong move to happen and then break structure. And we can see a strong push up, and then we can see it ran Asian high and then slammed down, making a low. And then we can see price kind of fizzled out. But again, it's happening in that New York London overlap. And then this also makes a nice little pattern here. So we can see the next day, Asian not doing anything but moving sideways. And this was actually a really really nice setup here, because now we have our swing high and our swing low that broke structure. We have an Asian consolidation here, and then we come into the New York London overlap, and price pushes up into the kill zone of the previous manipulation candle here, and it runs Asian high. And again, New York London overlap, it absolutely melts, respecting this area here. So again, you can see, I mean, it's essentially telling you when price is going to make the moves, and it's also giving you some really good targets and some really nice patterns that you can take advantage of. So if you've seen any of my other videos, this is what we refer to as the signature pattern. So essentially, we're looking for price to move sideways and then take a low, then take a high, and then you get a pullback in and continuation move like this. So for me, again, as an intraday trader who mainly is trading gold and US 30, EU and GU, this is when I'm looking for my moves. So I'm coming in, again, I'm looking for manipulation that's either happened at London, or if it's not there yet, I'm looking for it to happen in New York London overlap. And then in New York London overlap, that's when I'm expecting the volatility, the big expansion. So again, you can see every single move. Go pull up some of the pairs on your own and put this indicator on and go look at every single big move. And I can almost assure you that 95% or higher took place in New York London overlap, or that's when they started and continued into New York. And almost all of Asian will be consolidation, and almost every run before it happens, there was some type of spike above or below a range or old highs, equal lows before the big move happened in New York London overlap. So this is something that really changed the game for me as a trader. And now you know the TradingView indicator that if you master will make you a very successful trader that makes more money than you would ever need. And again, we have a lot of videos covering this specific topic and going even deeper, and mastering this on your own obviously is easier said than done. And trying to do it yourself could mean facing many problems, losses, and mistakes. And if you want to skip all that and shortcut your way to becoming a consistently profitable trader, click the first link in the description below. Also, if you're interested in learning how you can become a consistently profitable trader in 8 minutes, click here where I reveal how you can do just that. Make sure to like and subscribe, and I'll see you in the next one.